Hi there, Shingirai here again with another update on portfolio performance over the past week. Firstly, welcome everybody to a new quarter coming into Q4 of the year 2023. We are just about 9 days in at the time of recording this, so this time we'll do it a bit differently and just look back at the month of September. A lot of our clients would have received our monthly performance monitor, but over the month of September we saw 6 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 returning minus 0.34% up to down to CBAM 5 V2 returning minus 1.49% in a relatively risk-off week there, where you had a range between performance of the highest and lowest performing portfolios of about 1.15%. In terms of positive contributors to performance, we did see a divestiture from the Hypnosis Songs Fund, as long as a sale of a catalogue from a comparable investment trust specializing in music royalties, really acting as tailwinds for the performance of the Hypnosis Songs Trust, up 4.72% on the September basis, and then also that 6% rise in the prices of crude oil over the course of the month would see the FTSE UK 100 position up 2.67%, and then you just see that defensiveness on the shorter end of duration for the US high yield position, also delivering 2.63% over the course of September as well. Obviously a month where we saw dollar detracting about 3.8%, or rather strengthening 3.8%. That would see the S&P 500 hedged position due to their currency overlay pulling back about 4.87%, but not to say that global equities were not under pressure in an environment where investors are beginning to really have to accept that we're going to be in an environment where we're going to be seeing interest rates higher for longer as central bankers work back towards their 2% inflation targets, and that was a net negative for equity markets globally, especially in Europe, where we saw a 25 basis points interest rate hike coming from the European Central Bank during the month of September, and that would see our Allianz European equity position alongside Vanguard European government bond positions down more than 2.4% as well, and as I mentioned, relatively risk off on the month of September. And also ECB raising rates by 25 basis points, but the Fed in the United States alongside the Bank of England and the Bank of Japan deciding not to alter their base rates as well. Commodities, crude is up 6%, but we did see continued strength or resilience from Japanese equity markets as our corporate governance story begins to play out and inflation returns to the market as a sort of welcome sign really. And then on the fixed income side, in terms of jobs data in the last week of September, that would see US 2-year government bonds testing and breaking through that 5% mark, alongside US 10-year treasuries testing 4.8%. Flipping over to the first week of October, 6 out of 10 of our positions outperformed their respective benchmarks, with returns ranging from CBAM 3 minus 1.34% to CBAM 1 V2 returning minus 0.6%. But we did see some recovery there for our S&P 500 hedged position, up 1.13%, alongside European government bonds after the sell-off, up 69 basis points, and then just seeing that margin of safety on the ultra short end of duration with the money market fund from Royal London up 0.1% as well. We saw a bit of a reversal there as investors began to question that internal divestiture and whether it was really at arm's length from Hypnosis Songs Trust, and that would see a pullback of about 8.5%. And then looking at UK mid-cap equity down 3.3% on the back of obviously a sustained higher period of base rates from major central banks. This week, just looking at some of the macroeconomic data we've been looking forward to. Today, we obviously got a producer price index index reading, which is a sort of measure of inflation being paid by producers into the inputs that they put into the production of goods, ultimately being distributed through the economy, and that would surprise on the upside with the actual reading of 0.5%. versus a forecast figure of 0.3% for US PPI. And today also we'll be seeing Federal Reserve meeting minutes from their September meeting, where you'd be expecting investors looking for clues with regards to the path of interest rates going forward over the next couple of months towards the end of 2023. We also got some retail figures coming out of the UK, surprising on the upside as well. But we look forward to seeing a bit more CPI data tomorrow coming from the US, alongside initial jobless claims, and then GDP in the UK expected to surprise on the positive side, despite some deterioration in trade balance. And then we finally look at industrial and manufacturing production coming from the UK tomorrow on Thursday as well.